The SPDR S&P ASX 200 Fund, or STW, is an exchange-traded fund ETF that gives investors exposure to the top 200 companies listed on the Australian Stock Exchange, ASX. It's designed to track the performance of the S&P ASX 200 index, which is widely considered the benchmark for the Australian stock market. What does STW do? STW aims to replicate the returns of the S&P ASX 200 index by investing in the same companies that make up the index. These companies represent a broad range of industries, including financials, materials, healthcare, and technology. By investing in STW, you effectively own a small piece of 200 of the largest companies in Australia. Why invest in STW? STW is a simple way to invest in the Australian market. Instead of buying individual stocks, which requires time and research, STW gives you instant diversification with a single purchase. It's a low-cost, passive investment that suits both beginners and experienced investors looking for broad exposure to Australia's economy. Example of how STW works. Let's say you invest $1,000 in STW. The fund uses that money to invest proportionally in all 200 companies in the S&P ASX 200 index. This means you'll own a small share of major companies like Commonwealth Bank, BHP, and CSL, along with many others. If the index grows by 10% in a year, your investment in STW will also grow by approximately 10%, minus a small management fee. The fund also distributes dividends earned from the companies it holds, providing you with an additional source of income. Benefits of STW. Diversification. By investing in STW, you gain exposure to 200 companies across multiple industries, reducing the risk of relying on a single stock. Low cost. With a management expense ratio, MER, of 0.13%, STW is an affordable way to invest in a wide range of Australian stocks. Income generation. Many companies in the S&P ASX 200 pay regular dividends, and STW passes these dividends on to you, making it an attractive option for income-focused investors. Simplicity. STW is easy to buy and sell on the ASX like any other stock, making it accessible for everyday investors. Risks of STW. Market risk. Since STW tracks the S&P ASX 200 index, its performance depends on the Australian stock market. If the market declines, so will the value of STW. Sector concentration. The Australian market is heavily weighted towards sectors like financials and mining. This means STW's performance can be influenced by how these industries perform. Currency risk for global investors. If you're investing from outside Australia, currency fluctuations between the Australian dollar and your home currency could impact your returns. Is STW right for you? STW is ideal for investors who want broad exposure to the Australian stock market without picking individual stocks. It's especially useful for those building a diversified portfolio or seeking regular income through dividends. With its low fees and simplicity, STW appeals to both new and seasoned investors. STW is a smart choice for anyone looking to invest in Australia's leading companies in a straightforward, diversified, and low-cost way. Whether you're just starting out or adding to an existing portfolio, STW can help you grow your wealth over time.